Now for a look at what to expect when it comes to economic week ahead and economic data that we are expecting this week, I'm joined at the desk by Miyelani Maluleke, macro analyst at Barclays Africa. Good to have you with us as always. You're going to crunch a lot of numbers for us because it's been an eventful week last week and it's going to be yet another one this week. But if we take a look at last week, we saw the MPC keeping rates unchanged as well as the ongoing stimulus from central banks across the globe.
It's a lot of interesting things happening right now, right? So if you could just start with the South Africa MPC. When Governor Kanyako came in, I think there was a lot of talk in the market that he could come in as a bit more hawkish than his predecessor. But I think in the end, the decision to keep rates on hold, probably not a very surprising one, really. Since the last meeting, there's been a big improvement in the inflation outlook, mostly because of the big drop in oil prices. And of course, we are still expecting food price inflation to come down quite a bit. If you look at it on the growth side, still the economy is still very weak. So, you know, SARB probably had a look at all that and thought, you know what, I think there is some time to pause a bit more.
Was it a good move?
I think it's a good move. You know, the economy is still very weak. The inflation outlook, at least in the near term, does not look very threatening. You look at, you know, FX pass-through, because we remember SARB has been talking a lot this year about, you know, the risk of delayed FX pass-through. We have not seen a lot of that. So, you know, when you look at strength of the economy, I think the SARB is fairly justified in keeping the monetary policy stance unchanged.
That's a different case, though, when we take a look at the Bank of Japan, when we take a look at the Chinese bank as well as Mario Draghi and his partners at the ECB. Japan dipping into a recession, China cutting rates, ECB potentially bringing out quantitative easing to the market. It tells a different picture from a global perspective.
Absolutely right, and I think this is also something that's going to have an impact on the outlook for South Africa's monetary policy. And as you said, we saw Japan slipping into a recession unexpectedly, and at the end of October, we saw the Bank of Japan coming in with more stimulus. Another cut from China last week, and we are expecting the ECB to start you know, buying you know, government bonds again early next year. And look at the Fed statement last week; it was slightly more dovish than expected. So it looks like we are looking at an environment where monetary policy could remain accommodative for a fairly long time, right? And I think in that kind of environment, the SARB will probably look at inflation, look at the strength in the domestic economy, and if global funding does remain fairly abundant, I don't think the SARB will be in a rush to tighten you know, domestic rates. We're expecting cumulative hikes of 75 basis points you know, next year, but this is premised on the view that the Fed also starts moving by the middle of next year. But if that doesn't happen, I think the risk probably lies on the side of fewer hikes from the SARB next year.
SA GDP also has been on the back foot. That's due to come out for tomorrow, the third quarter numbers. But I understand there's a rebasing taking place. Is this a good thing, or are we adjusting the numbers to suit us and give us a figure that we're happy with?
No, certainly not. Look, I think this is a process that takes place every 5 years. People probably forget about it. So tomorrow's GDP release is going to be very interesting for two reasons. The first is that obviously it tells us about you know, what's happening in terms of the recovery given, you know, the weakness that we saw in the first half. And the second thing is that there will be the rebasing, as you said, and the benchmarking. So Stats SA will be rebasing from 2005 to 2010 prices, and it will also be moving to the 2008 system of national accounts. But because it's a process that happens fairly regularly in South Africa, I don't think it's going to add a lot to nominal GDP. So don't expect big improvements to your current account deficit and the budget deficit. But still, it is going to affect the historical data in such a way that makes it a little tricky to forecast the Q3 growth rate, right? We're expecting 1.8 quarter on quarter, and I think there is reason to be fairly positive about the Q3 number. We saw a bit of a pickup in retail sales during Q3, probably supported by the fact that a lot of the striking platinum workers in the first half were back at work in the second half, and the fact that a big rebound in mining during September basically saw mining grow in the third quarter for the first time this year. A bit of a support there. So we think, you know, of course, there are risks, as I said, because of the rebasing, but we think you know, there is reason to be a bit positive about the Q3 number, and we're expecting 1.8%, slightly higher than consensus, which is sitting at 1.4%.
It is from a low base, and as you mentioned, a lot of workers returning back to the forefront in the mining and manufacturing industry. If we look at local credit as well as the trade balance data out on Friday as well, could that play any influence or give us more bad news potentially?
Yeah, so Friday, we're expecting the credit number, as you said. Fairly important release, because when you look at what's happened to credit extension, especially to households, it's really come down quite a lot. And you know, it doesn't signal to us that even in the fourth quarter, you're going to see a very strong consumer spending environment. But the trade number, at least from a market perspective, I think that's where most of the interest is going to be. And but the number is very volatile and highly seasonal. So from around this time of the year, you start to see South African consumers buy a lot of products abroad, probably as gifts for others. But remember, we also started to see a big fall in the oil price, and I'm thinking markets will probably be looking to see if that has had any sort of big impact on South Africa's trade numbers.
Yes.
But because the numbers are so volatile and seasonal, we don't think, at least in October, it would have had a very big effect. So we're expecting another deficit of around 6.9 billion rand, slightly worse than what the market is expecting. I think it's sitting at 6.6 billion.
Indeed.
Yeah.
Gosh, we had quite a bit to get through. Well, we're still expecting the OPEC meeting to take place this Thursday, as well as October PPI numbers. But unfortunately, we have run out of time, Miyelani. Always a pleasure having you in with us, as always. That was Miyelani Maluleke, macro analyst at Barclays Africa.